Bitcoin ETFs are finally here. So we're going to talk about what ETFs are available, what they charge, because expense ratios are the single most accurate predictor of performance. We're going to look at which one is quote unquote the best. And the bigger question is, should retail investors buy Bitcoin at all? And if they do, should they buy Bitcoin itself or an ETF? So we've written extensively about Bitcoin over the years. Here are just a couple pieces. And we've been critical of firms like MicroStrategy that decide to dabble in a volatile cryptocurrency instead of focusing on their core competency. We've also looked at the volatility of this asset class over the years, in particular, the bull thesis as articulated by ARK Invest. So this is from a 2020 white paper. They describe Bitcoin as the most compelling monetary asset since gold, implying that it can be used for diversification effects, which is what we use Bitcoin for. They say that Bitcoin is a emerging monetary asset, and their analysis suggests it should scale from roughly $200 billion today to $1.5 trillion network capitalization during the next 5 to 10 years. Well, an update there. So today the market cap is over $800 billion. So it's getting to where ARK eventually sees it. But this chart here shows how the price correlates to market cap there on the left. So right now it's trading, around 42,000 a coin. So that green line shows where it is roughly right about now. And you can see that thesis back then, the more optimistic estimates ARK had were a 3 trillion market cap by next year. So over 3 times where it sits today. So when we look at the price so far this year, it's certainly outperformed NASDAQ. So Bitcoin's seen over 100% increase, NASDAQ at 46%, and the S&P 500 at 20%. The all-time high is around $64,900, so it has a ways to go before it hits that high, and bulls are pointing to the ETFs as the catalyst that will help it achieve new highs. Now, in that white paper, ARK addresses some concerns that are often raised. So people will say, well, Bitcoin is too volatile. We tend to agree with that, and ARK's response is, well, you don't understand Bitcoin. Well, whenever somebody tells you that you don't understand their investment, that's a little bit of a red flag there. But they say that it will become less volatile over time. Okay, that's fair enough. People say, well, Bitcoin is a bubble, and ARK says, well, they would argue it's only getting started. And in 2020, that seems that they were correct in that assumption. Bitcoin will lose value to forks and copycats, and they say the value can't be replicated by software alone. It brings up the crypto trilemma, which is that you have security, scalability, and the ability for the crypto to be decentralized, and you can only pick 2 of those. It's rather interesting. Bitcoin is for criminals, people will say, and ARK's response is that it's censorship resistant as well. And then, of course, the energy argument, but then ARK says, well, it doesn't consume more energy than gold or the entire banking system. Now, we found ARK's thesis compelling enough to add a small amount of Bitcoin at a cost basis of around $7,800. We recouped our investment since then, and we're playing with the house's money. Now, we need to be careful because of the phenomenon called house money effect, where when you play with house money, you start to play a lot more loosely with it. So we use Bitcoin as an alternative asset class. You can see here in our asset class allocation spreadsheet, Bitcoin accounts for 1.5% of our assets. So it seems to always remain under 2% of total assets, which is good. And it does act to provide some diversification effects. And how we can tell that is by looking at this great chart from Bloomberg that shows the correlation of Bitcoin to the MSCI World Index, which is essentially all developed markets in the world, the 99% of the market cap of all those countries. So you have United States, Germany, Japan, England. And you can see that in the .com, or that would have been the Rona, when the Rona impacted the markets, the short-lived Rona bear market there. You see that Bitcoin held up rather well, and it went to -40. So it was actually not correlated to the markets. And then you can see the green is where it's somewhat correlated. So as a rule, it seems to have decent correlation to the market. So it's not providing as much anti-correlation effect as we would like to see. But this chart points out that recently it's not been correlated. That's probably because it's been on the move upwards. Now, Bitcoin ETFs, that's what you're all here to learn about. So these are now live. 11 spot Bitcoin ETFs began trading last week, kicking off fierce competition for market share. That's from an article by Reuters. And these ETFs are just going to track Bitcoin. You might say, well, why don't I just buy Bitcoin? That's a good question. We're going to try to answer that. It says that Grayscale, BlackRock, and Fidelity dominated trading volumes. But pay attention to those words, trading volumes, not inflows. We're going to look at that, right? It says this gentleman from Verify, that's a tool that we use to analyze ETFs, says trading volumes have been relatively strong, but this is a longer race than just a single day's trading. So we have 2 days of trading data we're going to look at in a bit. Vanguard decided not to debut Bitcoin ETFs. That's a shame because they're the low-cost ETF provider. So we would have gravitated towards them if we were going to choose the quote-unquote best Bitcoin ETF. But Vanguard has said they have no plans to launch their own crypto investment products, probably because they believe what Goldman Sachs believes, which is that cryptocurrencies have no place in an investment portfolio. We largely agree with that and say that if you have a very high tolerance for risk, then you might dabble a little bit in some of the more mainstream cryptocurrencies. But more money has been lost to scammers in that world, and it's almost impossible to fathom how the sheep were fleeced in that entire debacle from NFTs to ICOs. And we've been warning our subscribers during that entire time to avoid this garbage. So what we know, well, we always want to invest in the lowest fee offering. So higher assets under management, they call it AUM, it's the money these ETFs attract, allow for lower fees. So what we can do is assess their fees today. And a lot of these ETFs are offering introductory discounts. Forget about that. Just focus on what the end fee is going to be. Stick with a larger ETF provider for two reasons. One, they're probably going to be attracting more assets. And two, you're going to be sure they're not just going to run into problems or do something wrong. They're actually going to be able to track Bitcoin, which is what you're paying. You want that exposure to Bitcoin. And of course, you can just say SATA and use Coinbase instead. So when we look at these 11 names, here they are listed. It looks like in alphabetical order. I've highlighted the ones that are of interest because of their lower fees. So anything that has a higher fee than what's highlighted, forget it. Grayscale and their stupid 1.5% fee that we were critical of, that company from when we first covered it several years ago, couldn't understand why people would even consider investing in that. Whatever that thing is, you're not going to pay 1.5%. But the lowest one here is at 0.20%. That's the Bitwise Bitcoin ETF trust. You wouldn't touch that with a 10-foot pole, but they've had some legal problems. And you've got ARK is in next place. Their 21 shares Bitcoin ETF at 21 basis points. We call those basis points. And that's attractive. Then you see Fidelity here and ICE shares. So those are the names we're going to focus on. Now, when we assess providers, Bitwise, as I said, they're wading through legal problems, and you just walk right past that. ARK, regardless of their performance, this is what most people don't consider. They're the most successful thematic manager, probably the most successful ever when it comes to attracting assets. That's how you gauge their success. They have the second lowest fees. And when you look at the table on the right here, you see say day one flows, day two flows. Look at the total flows column there that's highlighted in yellow. So it looks like iShares so far is attracting the most assets. That's not a surprise. iShares is a franchise of BlackRock, and they're one of the, alongside Vanguard, largest and most successful ETF providers out there. Then you have Fidelity. They have a great brand name, so it's no surprise they're attracting a lot of assets. Bitwise, as I said, don't just walk right past that. And then ARK in fourth place there, attracting about a fifth of the assets as iShares is. Now, because of those notable ETF brands, it's not a surprise that they're attracting assets initially. But remember that ARK commands a lot of institutional investor attention. So it's likely that it's early days, right? And of course, these fee structures can change over time. So you would want to stick with the larger names because they'll be more responsive when it comes to being competitive on price, and you would expect ARK to do the same thing. So just based on what we know today, we'd lean towards ARK, and that's because, as we said back in 2020, if ARK tells institutions that Bitcoin is where they need to be, it almost becomes a self-fulfilling prophecy. So it's very early days. Now the question is, should you invest in Bitcoin on its own, or should you invest in an ETF if you're even considering Bitcoin exposure? Well, we have our Bitcoin with Coinbase, and we've written about Coinbase in numerous pieces. It's certainly the only, let's say, brokerage firm, if you would call them that we would ever consider holding Bitcoin with, because they actually have some integrity. We're not planning to sell that Bitcoin. Were we to sell, we'd incur a fee. So if you want Bitcoin exposure and you're on the sidelines, you have a choice to make here. And that choice is going to depend on Bitcoin or Coinbase's fees. And we looked those up. So for USA and Europe, it's 1.49% to 3.99% per trade. That's steep. At a minimum, you're in for over 3%, right? If you buy and you sell 1.49% in, 1.49% out. And of course, on the left, there is a rake that they're taking as well. So at a 25 basis points, let's say, that's 12 years worth of fees. So remember, the ETF is charging those basis points every year, right? So after 12 years, you'd have accumulated enough then that would equate roughly to the fees that Coinbase charges. So if you have a decade horizon, maybe you go with the ETF, and also consider that perhaps ETFs start to compete on price and the price drops, though it's hard to say if that would happen or not. Price could go any direction, of course, but at any rate, as we said, ARK probably the most compelling from where we're sitting, and Fidelity and iShares, you couldn't go wrong with those names either. Now, if you're considering investing in Bitcoin, I strongly suggest that you watch this next video. It's very interesting, contains a lot of great data, and be sure to subscribe to our channel for more videos. Thanks so much for taking the time to watch this today.